Hello, welcome, good morning, good afternoon, good evening, wherever you are calling in from around the world. My name is Rebecca Lammers. I am based in London, England, and I am a voter in Ohio. I'm also a volunteer for Democrats Abroad, and I'll be hosting the webinar today. This webinar is to talk about federal student loans for Americans abroad, or student loan debt relief, or how to pay off your student loans, however you want to put it. It's in that vein of topics. So really excited to be presenting this for you today and to also answer your questions. So before we get started, I need to read this disclaimer out. Democrats Abroad cannot provide individual tax advice. Advice requires consideration of your individual circumstances and needs, none of which can be done at this event. We are not tax lawyers, accountants, or advisors. Please consult a professional tax advisor, accountant, return preparer when addressing your personal tax matters. Democrats Abroad does not endorse or recommend companies or individuals attending or hosting this event. The views expressed at the event are those of the respective individuals and companies, not Democrats Abroad. No liability is accepted by Democrats Abroad for the opinions expressed or for any errors or omissions expressed about matters of tax in any country, your financial planning, or your legal obligations. If you are in need of tax advice, you can consult the IRS Tax Return Preparer directory to find an advisor or tax return preparer near you, or providing online services to meet your needs and budget, though buyers need always beware. Great. So other thing, this is a free webinar. However, we would really appreciate a donation. We're suggesting a donation of either $15 if you can afford it, or $7.50 for if you're a student, unemployed, or retired, or $5 for the recording if you're watching this back. So please consider a donation to Democrats Abroad. So just to kind of let you know, we've run through the introductions and housekeeping. So I'm going to go into the presentation, and then we will go to Q&A at the end. So I will let all of you know when the Q&A box is open and when to submit your questions, and we will take them based on popularity. So you can upvote. The ones that are voted on the most will be answered first, and then we will do our best to try to get through as many questions as possible, although we may not be able to get through all of them. So about me. So I am a volunteer for Democrats Abroad, and I'm actually the chair of the taxation task force leading on our tax advocacy work. I'll talk a little bit more about that towards the end. But the reason I'm hosting this webinar is because I am a fellow individual who went to college, took out federal student loans, took out additional federal student loans in order to do my master's here in London 17 years ago. Oh my gosh, it's been a long time, but yes, so I had a lot of student loan debt. I still have it. And so I wanted to do this webinar in order to share with you insights in terms of how to pay off your student loans, what are the options. There's been a lot of confusion over the last few years with the COVID payment pause. And so hopefully giving you some basic information about how to pay your student loans will help you guys out. So just to kind of run through a very short history of the last few years, basically in March 13th, 2020, right as the COVID pandemic came in, there was a pause of the student loan payments. So no payments were due. And during this period of time, zero interest accrued. So that means whatever your payments, or sorry, whatever your student loan balance was at that point in time, it froze as well. There was no interest accrued during the whole 3-year period that the payments were paused. And this was really historically unprecedented. I mean, the fact that we had a pandemic was also unprecedented. So the reason that the government paused payments was because lots of people were out of work. There was a lot of disruption because of the pandemic, and they wanted to give people a break. And so that's basically what happened. I'm going to fast forward because there was a lot of different things about, they were hee-hawing about what to do about resuming payments for that 3-year period. However, by October 1st last year, payments resumed. And so there was a new plan that came in called the SAVE plan, which I'll go into more detail about here shortly. Also, I don't think this is any big secret for anybody, but since the payments have resumed in October last year, federal student loan providers have been absolutely overwhelmed with demand in terms of being able to not only service and update and manage the call volumes that they're getting, and also email volumes in order for people to better understand what's going on with their student loans. They have been it has been very difficult for them to implement and resume payments. So, for example, there have been lots of reports within the news about student loan phone lines being overwhelmed, people not being able to get through. I can personally say I have not been able to get through to my student loan provider, which is Mohila. I've tried multiple times. I have been on hold for an hour. I have not gotten through. So if you are in that position with your student loan provider, you are not alone. There are lots of people that are really struggling with that right now. But there has been information that's available online, and also there's been multiple different phases which the the U.S. Department of Education has been writing off debt. So not only have payments resumed and have student loan providers been overwhelmed with supporting people in terms of getting their payments back up. In parallel to that, the government has been writing off debt in lots of different phases. I ran this webinar in July last year, and between July and today, there have been so many changes. I was looking at doing another slide, but it's just there have been so many different types of student loan debt write-off. It's difficult to really go into detail about all of them. So in general, what I would recommend is that you get in touch with your student loan provider. And also, I'll talk about setting up an online account with them to find out if you are eligible. It really is down to each individual when you started your payments, your financial position. Lots of different factors go into whether or not you are eligible for various different waves of student loan relief. And essentially what the government have been doing is looking at different ways of the way that the laws are implemented to write off different types of debt. So that as a high level summary is the best way to explain what has been going on. And then in just kind of moving forward, between now and September this year is the on-ramp period. So essentially what that means is that, so like I mentioned, October 1st last year, payments resumed. However, this on-ramp period is essentially a time where people don't have to make payments. Payments are still due, but if you miss a payment, then it doesn't impact your US credit rating. It's not going to be reported to the credit rating agencies. And also there's this new SAVE payment plan available that you can sign up for if you so choose. So hopefully that kind of gives you guys a little bit of background on what's been going on. So this is the absolute foundation of 4 steps that you need to follow in order to figure out what's going on with your student loans now, and start resuming payments. So it's 4 steps. The first step is to log into your studentaid.gov account and make sure that all of your information is up to date. I'm actually going to go through each of these 4 steps in more detail. The second one is you need to figure out who your student loan servicer is if you don't know already. 3, review your repayment plan options. And then 4 is review your auto debit enrollment or sign up with for auto debit payments. So just to take these steps one at a time. Step 1, log into your studentaid.gov account and make sure your information is up to date. If you don't have a login or you can't figure out how to set one up, you can actually call Federal Student Aid Information Center on the numbers on the screen. They don't have a non-US number. It's these are US federal student loans, so it's a US phone number that you'll have to call. So that's the first step. The second step is to find out who your loan servicer is. Once you set up your account and you log in, it should have a section on your account dashboard that shows it's a My Loan Servicer section. It will then tell you who they are. There are a few like Navient or Mohila or what have you. So different people are assigned to different ones. It just depends on which of them are managing your federal student loans in particular. And again, if you can't log into your account, or once you do log into your account, it's not clear who your loan servicer is, you can actually call the Federal Student Aid Information Center in order to get information. So step 3 is once you have access to your online account, oh, it's also worth mentioning that in addition, sorry, I'll go back. In addition to your student aid login, once you know who your student loan servicer is, you can also set up an online account with your student loan servicer. And that is where you will then administer and sign up for various different repayment options and also set up payments. So, or make payments. So to review your repayment options, again, this is a very, very high level. There might be some other options that might be available to you, but one of the bigger ones that has come up is this new SAVE plan. So it's SAVE is short for the Saving on a Valuable Education plan. That is replacing the existing revised pay as you earn plan or repay. Borrowers on the repay plan are automatically going to be moved over to SAVE. So if you were before the payment pause in 2020, were on repay, you are going to be moved over to SAVE. That may not necessarily be the best option for you though. So this is why it's worth logging into your account and looking at the different options that are available and switching to a repayment plan that is more manageable or more suitable for your current circumstances. And then if you are on an existing income-driven repayment plan, or the acronym they use is IDR, the government loves acronyms here if you can't tell. But for the income-driven repayment plan, you can check to see if you're on repay or on a different IDR plan. If you were on one before the payment pause, it would have carried over when they started in October. However, they were also asking for people to look at their accounts and switch to a plan that works better for them. There's also been a temporary period where you can self-certify your income level. So all of these different repayment plans are based on your income. And to self-certify means that you didn't need to send any paperwork. You just put in how much you earned, and then they would adjust the payments based on that. That said, this coming year, at least starting in March, April, so in a few months, they are going to ask people to submit paperwork in order to confirm their income level and then adjust the repayment plans from there. So yeah. If you don't know what plan you're on, again, you'll want to log into your student aid account because it will tell you there, but it will also tell you on your student loan servicer service provider's account. And that is where you can change and select the plan that best suits your circumstances. Studentaid.gov account has a really good tool where you can put in your income and it asks you questions about like if you're married or have children, or like how much you expect your income level to be over the coming years. And they do like a calculator which recommends or shows you an illustrative display of the different repayment plans and how much you would pay in interest and how much you would pay over the lifetime of the loan, and also when it would be written off. And that's really super helpful. However, if you want to switch, you will have to switch within your student loan service provider account. Basically, if you select the repayment plan option and you're logged into your studentaid.gov account, it will then boot you over to your student loan service provider account in order to then set up the new plan. So I hope that's clear. Sorry if not. But for this save plan, so basically it is it's a new option for people to be able to make payments. It is set at 5% of your income rather than 10%. It can also be 10% of your discretionary income as well. But anyway, this kind of gives you an example of how much you would pay. But one of the benefits of being on Save is that depending on your income level, you can potentially pay zero monthly payments. So you would still be in repayment, but you wouldn't be actually making any payments because your income would be too low in order to make any payments. So that is potentially an option. And then as your income grows, they would ask you to pay an additional like 34 or 60, or depending on where it goes up to 227. But again, this is just an example. It really does come down to your personal circumstances and an income level on whether or not this is a good option for you. So setting up IDR or income driven repayment plan, there are various different options. So there's still the pay as you earn one. There's also the income based repayment plan and the income contingent repayment plan, which honestly, I was looking into these and I couldn't figure out the difference between them. I think it has to do with the way that the interest is calculated and also how much money you're paying. But like I said, you can go on to your online account and do a calculator and it will pop out and explain exactly like how much you would pay and how much interest would accrue for each of the different options that are available to you. One thing I would caution is that if you leave your current IDR plan for Save, you can't switch back after July 1st. So that's just something to keep in mind that they've put in place. And then, so once you've selected your payment plan, your final step here is to set up auto debit enrollment. A lot of student loan service providers will actually, if you set up auto debit payments, they will reduce your interest by 0.25%. But don't quote me on that. That's how Mohila works. I'm not sure how the other ones work, but they're trying to encourage people to pay back their student loans. So that's one of the incentives that have been offered. So you'll want to review your auto debit enrollment or set it up if you haven't set it up before. Now, this is the part that gets really tricky for people who are living overseas or living outside of the United States. You can only do auto debit enrollment with a US bank account. They just do not offer it for non-US bank accounts. You cannot pay with a non-US check. You cannot pay make a non-US bank transfer. It is all US setup, unfortunately. So one of the ways that we have seen lots of different people make their monthly payments or set up auto debit enrollment is to open a US bank account if you don't have one already. And then you can set up auto debit enrollment via your online provider account and then just input your US bank account details that way. I know that it is very difficult for Americans abroad to open a US bank account with a non-US address. However, there are a few that we have found. There's the State Department Federal Credit Union or the Navy Federal Credit Union. It's a new one I just recently learned about. But you need to be referred via a member or a friend or family or for example, with Navy Federal Credit Union, if you are a military family member, so like if your grandfather fought in World War II or like someone in your direct line has had something to do with the military, then you are eligible to open up a bank account with them. You can actually call them to see if you're eligible, as well if you can't go through the online setup in order to open. And the State Department is referred via other members, or you have to be part of a member association, like American Citizens Abroad, in order to open up a bank account. But those are the ones that allow you to open a US bank account with a non-US address. The other option is that you can open a US bank account, but you would need to use a friend or family member in the US, their address, in order to open the account. And then if for whatever reason you're not able to open up a normal US bank account, another option that is available is to use wise.com, which is an online transfer service. I don't endorse them or anything like that. I just know that it is one of the top ones from what I've heard from people who don't have a US bank account. You can both transfer money and set up auto debit enrollment with your wise.com account. One thing that I would caution is that Wise is not a bank, so do not keep your money in your Wise account. Other than the monthly transfers that you plan on doing. Yes, I know it's annoying that you have to deal with the exchange rate. However, there's not really very much that you can do to mitigate the fluctuating exchange rate. I can tell you personally what I do is, and I know not everybody can afford to do this, but I will do an annual lump sum transfer from my UK bank account to my US bank account. And then that way I know the money is there. And then it just comes out every month, and I don't have to worry about it until I do the lump sum transfer the next year. So that's another way to do it. But if you can't afford doing it once a year, you could do it once every 6 months or once every 3 months, or and as is the case with a lot of people, you can just do a transfer every month to make the payment. So it's up to you how best to manage it and what you can afford. But don't keep a lump sum of money in your Wise account, because it's not a bank. It's not protected by any government if they were to go out of business. So it's just something for you to keep in mind. Because I know a lot of people have been treating their Wise accounts like a bank account, and you really shouldn't. You shouldn't be keeping money there, just from a safety perspective. So just keep that in mind. Okay, so this is a really common question that comes up is the federal relief, like the pause, or the reduction in payments or adjustments in terms of based on making payments based on income, is that available for private student loans? So again, unfortunately, the answer is no, but what you can do is contact your lender. More often than not, they hear from lots of people. I hear this from people who are with Sallie Mae with a private student loan. They can help you with either refinancing, so helping you get the loan down in terms of monthly interest rate. They can look at doing loan payment assistant program options. A lot of them might let you like pause for a period of time and interest won't accrue or will accrue. It just kind of depends. Or putting your loan into forbearance if you just cannot make any payments at all. So all of these options are available, and you just need to contact your private student loan lender to find out what options they offer. So can I get help if I defaulted on my student loans? So yes, the answer is 100% yes. The government launched what's called the Fresh Start Initiative. So this was specifically because they know a lot of people have defaulted on their student loans, and they don't want people to have their credit rating impacted. They want to get them out of the default. So in 2022, they launched the Fresh Start program. And they've actually extended the deadline, so you can enroll in Fresh Start up to September 2024. And you can go to the student aid website to find out more information. one of the things is that if you don't know who actually holds your loan now because you defaulted a long time ago, you haven't been making any payments. Sometimes federal student loans are sold to different private providers, so it might be with somebody else. And you can call their default resolution group or email. I think there's an email or phone number. I think one thing I really want to make clear here, if you have defaulted on your student loans, that it has absolutely nothing to do with exercising your right to vote. This year is a very important year for every American abroad to vote. And any kind of problems you have back in the United States with your student loans, that they don't talk to your local election official where you would register to vote. So there's no connection. If you start to vote or you haven't voted in a long time because you were worried about your student loans defaulting and them coming after you, they're not connected. They're totally different government agencies. They're not allowed to talk to each other. So you definitely just should exercise your right to vote. It has nothing to do with defaulting on student loans. Okay, so what if I still can't afford the payments? So if you've gone through, you've set up your account, you've looked at all the different kinds of options, there are a few official kind of ways of managing it. So there's two, one's deferment, the other one's forbearance. The difference is that deferment means that interest does not accrue for that period of time, and forbearance means that the interest does still continue to accrue on your student loan. I'm not going to read these out, but you can see that there's a lot of different like medical or like serving in the military, like being able to pause for various different reasons. If you become unemployed, you can apply for either deferment or forbearance via your student loan provider if you so choose to go down that route. So will this affect your US credit rating? I know some people care, some people don't, but I thought it was worth mentioning. Yes. So if you're currently not making any payments, even though the payments resumed in October last year, it has not yet affected your US credit rating. However, if after the on-ramp period ends on September 20th this year, sorry, September, that should be September 30th. After September 30th, if you do not make any payments, then it will start to be reported to the US credit companies. And so you want to make sure that you do all of this sooner rather than later. For one, it's better for you to be making some kind of payment rather than no payment if you can afford it, so that at least you're paying it down with some kind of against the interest, which is going to be accruing at this point in time. And you want to make sure that you act before September 30th, when the on-ramp period ends. So just keep that in mind if that's something that impacts you. And then when should you do all of this? So I just said it, but now you should set up your online account, make sure that you have your payments set up. You want to do you should do this sooner rather than later, because that way you don't have this hanging over your head for the whole year, but at the very latest, you should act before September 30th when the on-ramp period ends. And then just a few tips and tricks, some of the things about income proof. So basically when starting in March, April this year, they're going to be asking you to prove your income in order to adjust your monthly payments that are due. It's all based on your adjusted gross income, or AGI for short, from your US tax return that you're supposed to be filing annually. Um, Even if you don't meet the income threshold for filing a US tax return, it can be worthwhile to file it anyway, just so that you can prove your low income and then potentially get your payments down to zero. Again, if you can't afford making monthly payments. Your student loan account can be linked to the IRS in order to pull your latest data and offer you your student loan repayment options. So check your student loan provider for that feature. Not all of them offer it, but increasingly more are. I have found that when I've tried to do that, it errors because I'm an overseas resident and for some reason it's not set up. But I've heard from other people that it has worked for them. So it just depends, I think, on the student loan service provider's website and all of that. You can also alternatively provide proof of income through pay slips. So you can give them the latest pay slip. They'll calculate it that times 12 for a whole year and then come up with your monthly payments based on that. And I mean, there's a lot of different ways that you can provide proof of income. So you just need to contact your student loan service provider for a list of what proof they accept. You can change your payments if your income goes up or down in the middle of the year as well. So you don't have to wait annually. I've done that when I got laid off one time. And basically I said, hey, I don't have an income anymore. And then they adjusted the next monthly payment. So I didn't have to pay for that period of time. So this is the other thing that I wanted to talk about, and some people brought it up in the pre-submitted questions, so I just wanted to address it. If you file your US tax return and you use the foreign earned income exclusion, your income could be negative adjusted gross income, and that would then make your US federal student loan payments zero. Basically, when you're an overseas resident, people will choose between filing with the foreign earned income exclusion or with the foreign tax credit. So this will really come down to your own personal circumstances in terms of managing your finances and what plays out best for you. The only caveat here is that if you have children, and you do the foreign earned income exclusion, it means that you will not get the child tax credit, which is $1,600 for this year of money back to you. So it's just something to take under consideration, and you need to think about overall with your finances. Is it worth it for you to file the foreign earned income exclusion so that your US federal student loan payments are zero? Or are you fine to make those payments and you want the child tax credit? So you kind of need to play both scenarios out to see what works best for you. And some people were like, is this a loophole? Is this legal? I'm like, yes, it's totally legal. It is totally up to you how you want to do it. I've not really been able to get a straightforward answer from anybody as to why this exists. Uh, I think at one point I read somewhere saying that this was an option offered to people who are temporarily living overseas, and the government wanted to give people for that temporary period of time a break for however long, for that short period of time, because obviously we're all going overseas for a short period of time, but I don't think that they really realize that a lot of people are long-term residents overseas. So you could basically file your tax return every year with the foreign earned income exclusion and never pay a penny on your federal student loan. You could technically do that. I did that for a very long time. Where I didn't pay anything, but you need to keep in mind that your interest will grow. So basically my student loan doubled over that period of time purely from the interest compounding. So this kind of leads me to and this was a great thank you to whoever submitted this article. I had been looking for information about this, but should you worry about a tax bomb? So here's the thing. If you don't make any payments towards your student loan and it comes to the time where it's going to be written off. So all student loans will be written off after 20 or 25 years, depending on the loan. And then at that point in time, if there is a balance, it gets written off. However, it gets written off, but it gets treated as income. So you end up owing tax, US tax. So any amount uh, here's the benefit, and this is one of the good things that the government did during COVID is that if you end up getting your student loan written off, like if you're coming up to your 20 or 25-year period this or next year, it will not be considered taxable income and there will be no tax, which is great. Um, any amount forgiven after 2025, so from 2026 onwards, it could be subject to US income tax. However, it depends on whether the government decides to extend that forgiveness, so to speak. So it's like, I think you kind of need to assess where you want to risk, like, do you want to risk it and see if the government actually allows continuing forgiving that as taxable income? Or are they going to go back to having that written off student loan and make it subject to US income tax again? We can't predict the future. Nobody knows. It's something, again, something for you to evaluate in your personal situation, what would work best for you. Um, so last thing I'll say is to stay up to date, these are various news resources that I have found. This guy, Adam Minsky, like that's where I've been getting like most of my information on what's going on with US federal student loans and what the State Department is doing and what Biden has been doing with trying to help with student loan debt write-off and all of that. So I would recommend following him. There's a website called the Student Loan Planner. They are a paid service. I don't necessarily recommend that, but their newsletter has been really super helpful. So you can sign up for their newsletter and they have a lot of different information about ways to kind of work out your student loan to reduce it or like how best to pay it down faster. And like they just have a lot of different resources that you can use and you don't have to pay for. So that's the only reason why I would say that. And also you can sign up for the US Department of Education's mailing list, which has been putting out news and information as and when they're writing off certain chunks of student loan debt. So that's another way of staying in the loop on all of these things. So with that, what I'm going to do is I'm going to open up the Q&A. So there we go. So you can submit your questions in the Q&A box now. Don't forget to upvote, and also you can comment on others if you want on the other comments there. Sorry, questions. But go ahead and submit your questions. Let me just double check this. Oh, and also you can submit anonymously if you would like to. I'm now going to just kind of do a 5-minute Democrats Abroad public service announcement, and then we'll get to the questions. So, just wanted to flag to all of you, if anybody is 35 and under, you are eligible to join the Democrats Abroad Youth Caucus, and they do lots of really great stuff in terms of raising awareness about, you know, what's going on with the US government and the impact it has on young people. So if you are interested, I think there's a link to the chat box right now, so you can sign up for their mailing list. Additionally, we also have the Progressive Caucus, and they're working on student loan justice, so writing off student loan debt and any kind of progressive initiatives there to end student debt. So there are a few resources here and also being shared in the chat box there. So if you are interested in learning more about the advocacy work that the Progressive Caucus are working on, you can join their mailing list as well. And then for the Democrats Abroad Taxation Task Force, which is the group of volunteers within Democrats Abroad that I lead, we're advocating for a switch to residency-based taxation to eliminate FATCA reporting for Americans abroad, exempting American business owners living abroad from the GILTI and transition taxes, and a lot more. So you can read more about our work and also sign up for our mailing list on the tax part of the Democrats Abroad website. So what does Democrats Abroad do for you? Our main mission is to register Americans abroad to vote. We also host webinars like this. We're working on a whole wide variety of different kinds of things we visit Washington, D.C. We visited them in June last year to talk to congressional offices and educate them about American abroad issues, and also do candidate outreach and education about Americans abroad. So we're working with congressional leaders to prioritize Americans abroad issues, but all of it comes down to you registering to vote and also voting in this critical election year as well. So 4 things you can do to help is register to vote. You can also join Democrats Abroad if you're not already a member. Also donate to Democrats Abroad, either for this webinar or in general, if you can afford to, or you can volunteer. We have so many volunteers all over the world, and you can go to our website to find out more. I just wanted to flag this webinar, even though it's not strictly speaking a tax webinar, but there are tax elements to it. It's been part of our 2024 tax webinar series. We have a number of webinars that we're hosting coming up. So next week we have How to Invest for Americans Abroad, followed by, if you haven't been filing your US tax return, then perhaps you may want to join us on the How to Catch Up on Filing US Taxes from Abroad on January 31st. And then we have a number of other webinars coming up in February, but those event pages have not been set up. But if you join our taxation task force mailing list, then you'll be notified when those events become available. And all of these are available for a small donation. And then we also have a number of tax-specific tax webinars, sorry, country-specific tax webinars. So keep an eye out for any local ones that are relevant for you. And just to kind of highlight about our remembering to vote, I think it goes without saying that this is a critical year for becoming for elections for the US, for other countries around the world, but in particular in the US, and we all have the right to vote. So please go to votefromabroad.org to request your absentee ballot. We actually have a number of, they're called voter assistance Zoom sessions. So you can join a Zoom and you will then be helped with a voter registration volunteer who can help you get registered. You can also email voterhelp@votefromabroad.org for assistance. We have volunteers that are standing by to help. You can also follow the Vote From Abroad social media in order to get reminders about upcoming elections that are relevant for you. And then finally, I just wanted to bring to your attention that Democrats Abroad actually host our own global presidential primary. So it's called the Global Presidential Primary because it's all over the world, but you can vote by email. You can even vote by fax if you want, by post and in person at voting centers all over the world, starting coming up here in about a month, through to March 12th. In order to vote in the Democrats Abroad primary, you must be residing abroad and a US citizen, be a member of Democrats Abroad, be 18 and older by the November election, and not be voting or plan to vote in any other 2024 state presidential primary. So that just means that if you want to vote in, like, if there's a Senate race or a House race or any other primaries going on in your state, you can still vote in those. You would just leave the presidential primary section of your ballot blank if you plan on voting in the Democrats Abroad presidential primary. So just keep that in mind. It helps Democrats Abroad because it means that we can then send more delegates to the Democratic Convention that's going to be taking place in August this year in Chicago. And the more representation we have within the DNC, the better for Americans abroad at large. So with that, I'm going to go to the Q&A, and I'm gonna sort this by most upvoted. So I understand the 25-year forgiveness is only if you are under an IDR plan. Is that so? Again, it depends on your personal circumstances. So, I mean, if your loan qualifies for any of the write-off plans that have been implemented, then it could be written off. But again, you need to contact your student loan service provider. Also keep in mind that once you sign up for an IDR plan, then you should then know what period of time that your loan will then be written off. So it's something that you need to follow up on. So next question is, for foreign earned income exclusion, we know we can get the deduction. Does the same work for foreign tax credit? I'm sorry, I'm really unclear on that question. Um, if you could provide more information. Uh, I'm not sure what you mean by get a deduction. So the only way to get your student loan payments down to zero is if you do the foreign earned income exclusion. You cannot do that if you use the foreign tax credit. I hope that clarifies. If um yeah, if if you have any other questions on that, just type it in and upvote it so that I can address it later. Okay, next question. If you use foreign earned income exclusion and basically would make zero payments, do you know if that would count as qualifying payments towards loan forgiveness? Yes, that is correct. So even though you would be making zero payments, you told them what your income was. It came out to zero on your tax return. Those would still be counted as qualifying payments, basically. What status counts towards the 20 or 25-year limit? Sorry, next question. Repayment, deferment, or forbearance. I think it depends on your loan, and you will need to get clarification. There are so many different kinds of, like I mentioned earlier, there's so many different write-off plans at the moment. Like they're really working through the legalities of it and trying to figure out the different ways of writing off student loan debt. So I'm not 100% sure out of those what will count towards your 20 or 25-year limit at this point. Um, it's been very confusing, I have to admit. Even I have been struggling, but the best way to do it is to know when you are in repayment, when you are in deferment, when you are in forbearance, for you to track that. Because I've seen a number of things in the news where people said, oh, I was in deferment or forbearance and that period should have been counted, but then it wasn't, and so they had to chase up their student loan servicer, and then they had that time period applied. um so it really does depend on your personal circumstances, and you need to chase them up on it as well. Can you recommend an online tax filing service for Americans living abroad that use these exceptions? I cannot recommend any one in particular. Democrats Abroad does not recommend accountants. However, there is a blog post that I wrote which goes through lots of different online tax filing options. Actually, this week, the IRS announced the free file options that are available, and I'm going to be writing an updated blog post based on those options. But I'll be working on that this coming weekend. So I think we can put the blog post link into the chat box. I will do that here. Sorry, I would need to stop sharing my screen, but I need to keep going. So I will put that link in the chat box and also in the follow-up notes when you get your follow-up email as well. Okay, so next question is, wouldn't being on the SAVE plan and submitting a foreign earned income exclusion that makes our monthly payment zero prevent us from having an accrued interest? Then theoretically, payments could be $0 until it is forgiven after 20 to 25 years. Yeah, look, it comes down to how you want to, like, how much control do you want to have over this? Like, do you want to have control over making zero payments from your tax return? Or and then you can then decide, like, when you make payment, like if you wanted to make payments during that period of time. Like I think the goal here shouldn't be making zero payments and then having it written off. The goal here should be figuring out how to control what your payment levels are so that you can make payments that are affordable to you. So I understand the logic of wanting to try to avoid making any payments, especially if you can't afford them, but there are lots of different mechanisms to your that are available here that I've gone through, like the Save Plan, which would put you on zero payments. But equally, you could be put on zero payments by filing with the foreign earned income exclusion. So it just kind of depends on how you want to, where you want to have the mechanism of control, if that makes sense. I hope it does. Okay, next question. Uh, Interest rates for student loans are insanely high in my opinion. Mine are around 6%. There are private options with rates about half of that. Assuming I'm making too much money for Save, are there downsides to switching to private servicers? Okay, this is a really good question. So there are different ones that you can switch to a private servicer. That is an option and it will save you on the interest. The thing is that private student loans are not managed like federal student loans. So a federal student loan, like I know that it was unprecedented, but that we had a payment pause for 3.5 years, right? Like people who have private student loans weren't eligible for that payment freeze. So the advantage is that if you can afford to make payments and you want to pay off your student loans, getting a smaller interest rate and switching to a private provider, as long as you have a plan in place to make all of those payments, then yeah, that will save you more money compared to if you stay in the federal, stick with like keeping your loans in federal student loans. But at the same time, with federal student loans, if you lose your job or if you have problems making payments, then you can switch to the zero payment plan. And you also have the option of like changing your plan based on your income, whereas a private student loan provider wouldn't be doing it based on your income necessarily. They would be doing it based on how much you owe for the life of that loan until it's paid off. So it depends on your personal circumstances and how you want to do it, but you have more flexibility and protection under federal student loans, whereas with private loans, you could pay it down faster and pay less because you have a lower interest rate. So it just depends on what works best for you. Um, as we are working overseas and can't work in the US for a public loan service, PLSF approved organization, do you know of any online remote employees or volunteering opportunities that will count towards PLSF years of service? I am not aware of any. Um, Here's the thing, if you have worked for a nonprofit or for the government or any kind of volunteer organizations, it needs to be an approved and they need to be registered under the PLSF program in order for you as an employee to then be eligible. Just because you work for a nonprofit doesn't mean you're eligible. Just because you work for the government, doesn't mean that you're eligible. They have to have been enrolled in the PLSF program, and jump through the hoops to make sure that any of your work, for that period of time is then forgiven. So, I'm just reading somebody else's comment. So someone has been receiving the PSLF forgiveness. Their employer is a 501(c)(3), and so far they're counting my payments towards PSLF. I'm just nervous when it gets to forgiveness day, it won't happen. Yes, I mean, that has also been reported a lot in the news about people who thought that they were enrolled in PSLF. What I would recommend that you do is just make sure that you track all of your payments during that period of time. Make sure that your employer is actually signed up for PSLF forgiveness. And that is the best thing that you can do. Yeah. Are we able to change the providers they assigned us to if we are unhappy with the one we are assigned? I am not aware of a way to do that, unfortunately. I know not all of them are very good. I'm not very happy with my but it's better than nothing, I guess. Yeah, unfortunately, you're kind of stuck because the government sold your loan to they basically have outsourced management of that student loan to that particular provider. So you don't, unfortunately, as far as I'm aware, have an option to switch. Um, okay. Was the 0% interest during the pause for all federal loans? I have been consistently paying and interest has still occurred for me. All federal loans currently managed by Nelnet. It no. The answer is no. Direct loans, yes. I think it was Perkins loans, yes. They're not all of them were, but if you go to the student aid website, it should tell you exactly which ones. If you were still paying interest, most likely that particular loan was not eligible for the pause for whatever reason. Yeah, I'm sorry. Um, does Democrats Abroad or other connected groups have a space where we can find accounting or legal services as a foreign resident? Um, so one of the reasons that the Taxation Task Force has been hosting tax education webinars is to give you a basic understanding and knowledge of how financial how to manage your finances and in particular taxes from abroad. I would really recommend the webinar that I hosted last week, which was how to survive tax day as an American abroad. I went into a lot of detail about how to find an accountant. So again, that's going to be in the links that's going to be emailed to you after. I just note that we're at the hour here. I'm going to take two more questions and then we're going to wrap it up. So next question is, calling the student loan line is practically useless because of the volume of calls. Yes, I agree. The online FAQ and chatbot are even worse, unfortunately. Are they going to improve these? My understanding is that they're working through as many as they can. It does also depend on the student loan servicer, because they're a private company. You know, our loans were sold by the government to the private loan companies, who are responsible for managing the student loans. Um, I I know that they were hiring additional staff in order to manage the influx of calls. If there is a way in order for you to send a message to them through your online account, I would recommend doing that as well. The best thing I can say is just to keep trying, unfortunately. I have found that more often than not, if you call at the beginning of their workday or at the end of their workday, the call volume tends to be lower. So if you call first thing, you have a higher chance of being able to get through. But I know that can be difficult, but yeah, unfortunately, there's not, I haven't heard other than they're working on it more than that. Okay, last question. How can you find out how long you have been paying on your loan? I can't seem to find anything out on my loan sites. Um, ideally it would be really great if you can track this yourself. Unfortunately, I know that that can be really difficult, but the more you keep track of your own records, the more information that you have to your hands in order to back up in case the student loan servicer makes a mistake or a wrong calculation, which I have seen has happened. So my loan was sold at one point and I lost the whole history on that and it was really super annoying, but I had my bank statements so that I knew at least the payments that I've been made. But best thing I can recommend is if you don't have a history or you don't have a way of going back and finding your history, to start making your payment history now so that you can at least track from now going forward what you've been making in terms of your payments to pay down your loan. Um, and then use that in order to make sure that they actually write off your loan after the 20 or 25-year period. Okay. So I think that's it. Thank you again, everybody. I'm gonna open the chat and just kind of hang around and chat to people after we stop the recording. But thank you again, everybody, for attending. I hope this was helpful. And yeah, good luck. And Thank you again for attending, and I hope you have a good rest of the day, evening, morning, wherever you are around the world. Thanks again for joining.